All right, so let's look at moving averages first and how I use them. I've been stuttering all day. All right, the indicators that I use the most, what you're going to see is MACD, which stands for the moving average, convergence and divergence, and then moving averages. I love me some moving averages. So the numbers that I use is going to be the 20, 50, 100, and 200. Now, if y'all got TradingView, you already know, depending on what subscription tier you signed up for, you can't have that many indicators pulled up. So I am a fan of using the moving average ribbon, all right? Now, if you ever want to change the settings on your moving or on your indicators, or if you forget like what one of the lines are on it or something, all you have to do is come over to like where your box of indicators is, and you click on the wheel that says settings, and it pulls it up. You'll be able to see your inputs and change the style, all right? So I always label my moving averages the same colors. So it automatically is going to pull it up with the 20, 50, 100, and 200, which are the most used ones, right? It'll automatically have it up. They are different colors, but these are mine. Now, if you happen to get a little lost as we're looking at all of these colors on here, I'm going to leave this up and you can see the color code up here, right? It goes in order 20, 50, 100, 200. All right. Now, what the moving averages are is the moving average is going to show you the average closing price for whatever number that you set it to. So my yellow is my 20, right? So this is showing me the average closing price of the past 20 days. So that's why it's the 20-day moving average. Now I use the simple moving average. That's just me. You can use the exponential moving averages. The difference between them is that the exponential moving average, which is the EMA, is going to hold more weight. Like, so there's a calculation, right? And so it's going to hold more weight on that calculation to recent price changes. So the reason that I'm not the biggest fan of using the EMA is because according to my trading strategy, how I enter and exit, it would kind of fake me out a little bit too much. I didn't like my success rate with it. So that's why I just like the SMA. I'll keep it simple. Yeah, it is what it is. All right. So there's multiple ways that we can use them for the crossovers. We can have bullish or bearish crossovers. I enjoy using them to help me make my watch list, especially if I need to do it just like really quickly, as in like the levels that I'm looking at. And I especially use them when I'm making out my watch list for the week. I like to go on my daily or the weekly time frame and just look at those levels. So we'll kind of look at it and we'll just go through it. So right here, the yellow is my 20, right? And so I see that the 20 moving average is at 411.38. So I would put a level just a little bit under it. I usually go about 10 cents under wherever the moving average is. So I'll just put that there for now. Now, right under there is my 50. Now, when I look at where the 50 is, I also see, because of course the indicator is the very last thing that we're looking at, right? So I already would have been looking at my structure and the trend and price action. And when I'm looking at price action, I see this double bottom here, right? I already see that. So therefore, putting a level here for support just makes sense to me. The fact that because at demand zones, at support, we expect to see double bottoms, right? So having that 50 right in there, beautiful, chef's kiss, love it. So I feel good about that level. And then I would go ahead and mark off the 100 and the 200 as well. I like to do it just a little bit under it because we always gonna get a freaking wick. And then we'll mark off that. Now, if I turn off these moving averages, I think somebody needs to mute yourself. What's it doing? Oh, okay. So if I turn off these moving averages, these are the levels that I would look to play for the week. This 411.10 to the 403.72 right in here, right? I can see this now. Of course, here, if I see that this is resistance above here, I'm going to go ahead and mark off this level at this 415.61. Right there. Now I know that's like a lot of pink lines. We'll delete these down here, like where the 200 was, and we'll just keep these. I have these 4 levels right here, and it just makes so much sense, even looking here on the daily. I would love to take either a bounce, or if this moves above this 411, let's make it different colors. Y'all killing me. All right, just so we can get different colors over there. So we see that right here is this 411.10, which is where the 20 also was, right? So I would love to see this either bounce at this 411.10 or to trade it under 411.10 from looking at this, right? So these are my macro levels. These are levels that I got off of from the moving averages on this higher time frame. So then what I would do is go from the daily down to the 1 hour. And I would do the exact same thing. The exact same thing, because you have to remember these moving averages is the average closing price, where they closed it at, where the price was allowed to stop out at. No, here. Now this is ugly. That's ugly, right? So I would look at this and then just walk away. I hate that that was the example there. Sorry, that was ugly. So, but now that I'm down here on this smaller time frame, and I already have my macro levels marked off due to the moving averages, I would just come in here and mark off where I see the price is retracing to, right? And then these would be the micro levels that I would mark off. Now, I am the type where I need to know the difference between my macro and my micro levels, right? So I got to change the color on it so I know what I'm looking at. And so I would put a level here. Does everybody see that before I move on? Does that make sense? As to why I put the level right there? Yes, no? Just give me some yeses or some thumbs up. All right, cool. If y'all have questions, I got the chat box pulled up. Don't turn your mic on, just use the chat. I got it pulled up because I'm gonna just kind of go through it. But if it doesn't make sense, of course, ask and we'll backtrack on it. But all right, so I would put that there. And then of course we see something, another macro level right here. And what I'm looking at is the support, previous support right there. Now, is it ugly in this grouping here? Yeah, that day range. Is it ugly right there? Yeah, but I see the previous support. It was held strong right there. And it's at a psychological whole number at the 406. And then boom, there we go. This is how I'm going to trade SPY based off of using, or this is how I mark off my levels using the moving averages as my parameters. Kind of let y'all sit on that a little bit. So let me ask y'all this, and then being down here on a macro level, I'm definitely going to adjust this because no. All right. So let me ask y'all this. If I wanted to trade SPY tomorrow, where would I enter for a call? At what price point or what level, whatever, would I be entering for a call? Yes, mentees can answer. Anybody. This is we're in the Discord. This is a Discord class. Anybody. That held that. The 411, I did just adjust it a little bit. The 410.87, yes. Above the 411, I adjusted that. I know what y'all mean. Above the 411.23. So we see that the price right now is at 410.97. Yeah, I'll make it bigger. My bad. We see the price right now is at like this 410. 97. I have this level at like 410.87. After hours, we're up here at like 411.23. So let's say pre-market, matter of fact, I'll make it exact. Let's say pre-market, right before the market opens, the price is at 412.77 right here. Where do I get in for a call? Where do I get in for a put? I got y'all. I'm not gonna force y'all. So if the price was right here at market open, right? So this is where a lot of times when y'all be like, well, dang, well, how'd you know what to trade at market open? How'd you know what to look at? If I'm looking at like about 10 minutes before the market opens and SPY is trading at 412.88, baby, this is what my attention is on because it's right here at a level that I already mapped out. So I'm going to be looking to enter above 413.26, or make sure y'all pay attention to this. If it rejects, if it opens and it immediately starts downtrending, guess what? It rejected my 413.26. I'm getting into puts. I'm going to trade it down here to 410.87. My overall target, or my target, would be this 410.87, right? Like if it's trading right here, it's going to do one of three things. It's either going to come above here, calls, it's going to reject and come down here, puts, or it's going to range, stay away. Y'all got that? And that's how I mark off SPY. Now let's pull the moving that's how I marked off on my watch list. That's one way I use it. Now let's pull these averages back up and we can go here like on let's go to the daily and look at all of these again. All right, so when you are in an uptrend, when the price is in an uptrend, the 200 is going to be your first level of support, all right? So, or first level of resistance. So the price is in an uptrend. We'll say this is the 200. I'm just gonna have to put the 2. I'm sorry, I can't do. And then we'll say up here is the 100. This is your second level of support. And then up here should be the 50. And this will be your third level of support. Now, each of these 3 has a nickname. And I really want y'all to remember these nicknames. So the 50 is known as the little dip. The 100 is the big dip. And the 200 is the value zone. So what we mean by big dip or little dip, retracement, pullback. Don't think too hard, right? What's a dip? So this is particularly on our daily, right? So if the price pulls back to retrace to the 50, that's okay. That's okay. It's not enough to scare us out. But if it loses that 50, the trend is more than likely about to change. The overall trend is about to change, and it's going to come down here to the 100. If you, again, the middle dip, the big dip, sorry, little dip, big dip. Didn't we talk about that? Big dipper, little dipper? Probably not, sorry. So the big dipper, so the largest retracement, right? We'll have, what is that saying? It'll come from the 50, it'll go to the 100. Oh, okay. And then if we lose this large retracement here, then we expect it to come down here to the value zone. Now, what's the value? Is just like the overall value of the stock, right? Are we trading above or below value? So let's play that out and look here. Now, remember, this is up here, right? Yellow is 20, 50, 100, red is 200. So let's come back here. I know we got a lot going on, but we got to get used to looking at this stuff, right? So we see that when this uptrend, yeah, I think so. So we see that when this, mute your mic, when the uptrend, ooh, y'all gotta mute y'all mic. Y'all know I'm ADD. I keep getting lost. Okay, when the price started to uptrend again, we had the 200 here. You know, it made it past that, went to the 100, went to the 50. It broke the 50, and we're good. Pulled back. Now this was actually what I was attempting to trade last week on SPY. When we were swinging SPY, I think we were only able to hold it for these 3 days. And we were still in it this day, And it was about this level, and I was saying this is what we want to break, but then it bounced. I was looking at the 50. I needed to have lost that 50, and I truly would have believed, because remember, overall, I wanted to bring it back down here to 400. That was my overall target. And if it lost that to 396, but we held the middle dip and pushed back up. So when I saw this, I honestly wanted to enter into swings or for calls. I really wanted to enter into swings for calls. One, because price action is already showing me that this just double bottomed and held the 50. More than likely, we finna move back up here to the top. I wanted to do that so bad, but wish I would have too, but that's okay. So we want to see that. Now, how do you make bullish and bearish crossovers? A bullish crossover happens when you get the short-term moving average the shorter-term moving average crossing above the longer-term moving average. It doesn't matter what it is. It doesn't matter if you have up the 17 and the 48. If the 17 moving average, meaning what the price has done these last 17 days, is crossing above what the price has done in the last 48 days, we got us a bullish movement. That's just common sense. It makes sense, right? We want to break it down to where it makes sense, not where we're just memorizing it, because then when things pop up, we know how to adjust with it, right? Because we understand the actual mechanism of what's happening. So now I think someone did ask me that earlier. Now they were asking me because it closed below. Well, someone asked earlier in the Discord what I thought about swinging puts on SPY. I don't know, because we've had a very choppy week, and this is also a candlestick pattern right here. Ooh, 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 ooh. This is a candlestick pattern. So I'm not sure. And it did reject this 20, and it came right here. Maybe possibly it could have, but we're already seeing that day to day. It just, it's not the week for that. So, I mean, yeah, you absolutely could have. I just don't have confidence in the overall market, as in like the fundamentals, what's going on in the on the economic calendar and the news this week, to have trusted this to went my way day to day. All right, so let's look at a crossover. So, I don't want to look at like I got to make my chart smaller, y'all. Sorry. I'm going to pull up individual ones. And matter of fact, we're going to look at the 50, and then we're going to look at the 200. Does anybody know why I'm pulling up the 50 and the 200 in particular? The 50 and the 200 are, a lot of people say, will be the most important ones. And if we think about it, we're looking at the middle dip in the value zone. Of course, we want to see it. So let's look at what happens when the middle dip crosses below the value. We get a downtrend. We get a very large downtrend. A very large downtrend. This is called a death cross. When the 50 crosses below the 200, and this is specifically for only the 50 and 200 and only on the daily time frame. All right, that's called a death cross, and we can expect that the trend is going to change, or the trend will reverse to the downside, and it will be to the downside for quite a while. It will now become the primary trend as this happens. And then when we see the 20 cross the 200, this is a golden cross. Oh my gosh, we love this. We love this. We love this. And we are absolutely keeping up somewhat with this uptrend. Somewhat, right? So now what happens if we look at this on the 1 hour time frame? Is there a difference? Nope. It's still a bullish crossover, and we still love to see it. Make this cross right in here on this Wednesday afternoon. Now, did it pull back? Yep. But look at this. And it's held the 50 pretty strong. Held the 50 really strong. Consolidated in here, right? It broke below it, kind of consolidated a little bit. But when it broke below this 50, this should have been your signal to have exited regardless. Okay? We definitely want to get out there. Now, I just want to show y'all one more thing and we'll move on so we don't beat these to death. I want to show y'all now the 100 using it on the 15-minute. So you always have to have a trigger time frame and then or an anchor time frame and a trigger time frame. So what I mean by that, we got a little bit too much yellow going on. So what I mean by that is that yes, exactly. So one time frame is it being the anchor, right? This is what I'm looking at. This is what I'm paying attention to. That's giving me my signal to get into a trade, right? Or giving me my signal that a setup is good to enter into a trade. But I need to go on a slower time frame, and that is where I will find my entry. I'll be able to time my entry on that lower time frame, which is the trigger. So when I'm swinging, my daily is my anchor time frame and my 15-minute is my trigger time frame. That's where I pull the trigger. So let's say, for instance, so this is something that I looked at when I was asked, would I swing puts to the downside for SPY? I did not feel comfortable with it because when I pulled up the 100 moving average on my 15-minute, and it's just one of those nuances that I learned, right? This is trading above the 100. So no, if it would have been trading below the 100, if this would have just been just a little bit under this, like what, 410.25, I would have swung it. I really would have, because it was trading below the 100 on this 15-minute time frame. Wasn't doing that, I'm not going to do it. This is also really pretty. Let me turn off the 200. This is also really great to look at as well on for day trades, for a day trade. As long as this stays above and you get a confirmation candle. So for instance, right here, this broke above, and then on the confirmation candle, it never pulled back to touch the 50 at all. I would have entered and wrote this out. And I would have entered with the idea in my head that more than likely I'm going to swing this. This just crossed above the 100. And then, of course, price action would have had us exit in here, right? Price action would have kept us in there. And so those are some of my favorite nuances with moving averages. So now let's look at VWAP. So VWAP is the volume weighted average price. Hold on one second. I have a class that's about to start. Let me text her 1 second. All right. Okay, so VWAP is the volume weighted average price. Now I'm gonna go ahead and tell you VWAP is pointless if you are above the 1 hour. It can kind of maybe, give you what you want to see with it in here on the 1 hour, but honestly, I think the 15-minute and the 15-minute and lower is like the best time frames that it works on. Now, I like to use this in the morning, and it's also a really good tool to use as far as scalping. So we're going to go back in time to another day because today was a ranging day and it was ugly. It was a little ugly. It was a little ugly. So let's look here. I think this was open. Yep. All right. So this was the first candle of the day. We're on the 5-minute. So I typically don't pull VWAP up until, especially if I'm on the 5-minute, until like the first 2 or 3 candles, because I want to be able to see it. I need to see it clear in here. So what the volume weighted average price is just what it says. It's showing you what the average volume is when we're at that price, when the stock is trading at that price. Now, volume, remember, is showing us the amount of shares and contracts being traded, right? So if I want to know what type of trading is happening when I'm typically at this price at 412.34, we see that it's telling us that typically on average, this is a sell-off zone. So how it works is this is going to be the upper band. This is the lower band. And then the line in the middle is your actual VWAP band. This is the actual average price. All right. So I changed the colors on mine. So if you were to pull yours up, it wouldn't look like this. I think naturally All of the, I think this is, it's green, or the upper and the lower band are both green, and then the VWAP is blue, I believe. I changed my upper band to red just for consistency, right? To keep it all together. So this is typically where the selling happens at this price. This is typically where the buying happens when we're at this price. And this is about like the median. This is the range. So when we see here, when we see that this closed above it took the lower band VWAP, upper band, all of that, right? It was under and it's closing above. This is an entry. This is where I would want to enter. And as long as it held the upper band, or at least at the very least didn't lose the VWAP line, I'm safe to stay in here. So y'all see how that can help, like especially if you're doing like scalping. It can really help you to be able to see just when you want to exit. Now, I would have exited right here because price action. This is a bearish Harami, right? So I already would have got out right there. I would have been just fine. But then we see that the candle following it closed below the upper band. So because I was in a call here, this is my signal right here to exit the trade. We see it attempted to go up there, right? It attempted, but then it rejected the upper band and came below. So I would have been out of that call. This is also an entry signal for puts. Now, again, we got to pay attention to price action first, foremost, always. This is a bullish Harami. I would have been out. I just would have been out. But once we saw, because of course, you're always going to have your horizontal levels, right? We see that this created the same bottom right in here. And once it broke this support, this previous support, even from early in that morning, and then we see it's also below the lower band where the buying typically happens. It's continuously rejecting where the buying steps in. We want to stay. I want to stay in until price action gets me out, and you can just do it over and over. Now, this right here, I never would have been trying to play it at all, because look at those candles. That's ugly. But when this dropped out of here, this closed below, and it was the first time that it closed below this lower band. Well, honestly, it was the first time it even closed below the VWAP, right? I would have been looking to enter. I would have looked to enter, and when this confirmation candle came and it traded lower, right? We love to see that. Now, I also like it for days like this. Because sometimes, like, so when we see this broke back below and it's in congruence with the level that we marked off per period. So if I would have saw this break back below the upper bands, sometimes I think it is good to think that I'm going to trade it from the upper to the lower bands. If price action allows, I will continue to trade it down, right? If price action allows. So I just think that this is good. And then look, it broke back up above. You could have kind of held and doing all that. So I like to use VWAP. Now, my favorite thing to use it in congruence with, and we're going to have to look at a different stock. What do I have charted that's not ugly? Okay, cool. Was that a good explanation on VWAP? Well, let me rephrase that. Everybody feel good about VWAP? Anybody want me to go back over it? Steph, any questions?
Well, for that screen right there, so if it goes past the red though, would you be waiting for a put, or you can just stay in until it comes back down into the VWAP? Okay.
Red, the upper band?
Yes.
Oh, okay, girl, because it was a lot of red. Okay,
sorry.
Go back to SPY.
Anyone, I guess I'm just new to the VWAP, so I'm just trying to understand when the cues are to get in and get out, and if it's just don't even mess with it.
So right here, right? Like this would have been a great signal to have entered, because we see that we were trading below it and it closed above it. And then on the confirmation candle, it bounced and it held it. Now, so remember when I said that at the very least, Like we want to make sure it doesn't close below the upper band. And at the very least, we want to make sure it doesn't lose VWAP, right? So this, and then also, well, because I'm gonna tie it in with MACD right here is actually the perfect example for that. But like this, where I don't think I would have got out right here, because look at that buying that came in at the actual VWAP line. This is the average buying price. This is the average price where volume kicks in, is on the middle band. So when I see this bounce off there, look at all that buying on this lower wick, I still would have been in. Now, when would I have exited? Based off of VWAP, I would have exited right here. This is where I would have exited. Nope, here. When it actually came down and touched, like in this candle, when it actually came down to touch the upper band is where I would have exited, based off of VWAP. Now, based off my level, y'all know your girl would have been out right here. And then this came in and made a bearish harami, I'm done, I'm good. I would have got out right there. Now, when you say, when would I want to leave it alone? A time like this. Because this isn't very clear, right? If we're doing it based off VWAP. Now, overall, it was also still making higher lows and higher highs. So this is why I always say indicators is the last thing that we need to be pulling up anyway. It's step 4. So you're already going to have things on your chart. If you want to my babies, you're already going to have something on your chart that's giving, like, that this would have just giving you the confirmation to exit, right? So, because you see how I already have my level there and it's lining up with the indicator. I would have been out up here. If I was using it based off of VWAP. Now, overall, y'all know that we in this as a swing. So, other things would have came into play with it. Now, let's say that we're trading above it. Like, so in this instance, it just consolidated in here. When this came up here, again, I'm looking at price action. I would have been like, oh, okay, this double top, but cool. We broke back below. I would have entered when it broke back below the upper band, right? And like I said, overall, I would just look to trade it from upper band to lower band. And if price action allows, then you can stay in. But the thing is that you need to remember to look for price action signals. You have to. If y'all know nothing from me, don't come to me with no freaking naked chart, because I'm not going to help you. Sorry, I love you, but that's not actually helping you. And then pay attention to price action. Know the harami patterns and know the Goldfinger's patterns. Be able to immediately look at them and be like, okay, this is a bullish harami, this is a bearish harami, this is an engulfing. Know your inside bars, outside bars. Before y'all come for me, I just have to use both languages. And then in this instance right here, okay, now let me tell y'all though, because my favorite thing to use with VWAP is MACD. And I know some of y'all don't like MACD, but my favorite signal is MACD. So what's MACD? It stands for moving average, convergence, and divergence. There are 2 parts to MACD. We got oh, there you go, Kevin. There you go. What's up? All right, so we got the signal line, which is, if you're using it on TradingView, is going to be the orange line. And then you have a moving average line, which is this blue one. So with MACD, the moving average is actually the sum of the subtraction of the 26-day from the 12-day moving average. Whatever that sum is what makes up the moving average on MACD. And then we have the signal line. What the signal is signaling a momentum change, Therefore, this is showing me I'm able to get a little bit of price action and momentum in here. So it's a dual indicator and I absolutely love it. So let's look at this example. I think it was today. Yep, right here. All right, so when I was saying that I wouldn't have got out right here, the reason why is because I'm also looking down here at MACD. I'm looking right here. So let's break it down. Right here is our 0 line, okay? Anything above here is positive values. Anything below here is negative values. It's just, this is positive, this is negative. Makes sense, right? Now, these bars in the middle, this is called the histogram, and it's just showing us the momentum, how what word do I want to use? How long we should expect the momentum to last, I guess, that move to last. So when we see it fade from the darker color to the lighter color, this is showing us that momentum is reversing. It's about to reverse. So when we see, now remember I said that this blue line, and don't forget, if you ever forget, just pull up your settings, right? So we got the 12 and 26, which is the MACD line is the blue one, and then the signal line in here. So yeah. So when we get, hello, by the way, but yes, ma'am, of course, I always record it, the classes, and it goes into the weekly classes channel. Well, it goes on YouTube first, and then I put it in the weekly classes channel. So just make sure y'all subscribe to the YouTube channel, because I post videos on there like almost every day, just about every day. And side note, while I'm thinking about it, because I feel like the Discord never, y'all do know I do the I go live on YouTube every Sunday and I map out the entire watch list. That's why I be asking y'all what y'all want, because I'm gonna come over here and do this, and then I put it in the Discord, right? So see y'all Sunday afternoon. But all right, so let's get here. So if we're looking at this, this is where I would have, it was under here, it closed above the upper band. I see it bounce off. I see the buying pressure come in on this lower band, and look at MACD. It was already shifting. It's already shifting. And then right here on this candle, it made a cross. Now, remember, the blue line is the MACD line, which is showing me the price. We'll just give it the nickname of the price. And then the orange line is the signal, which is momentum. We find momentum in the volume. So when I see the price cross above the volume, do not let that go over your head. When I see price cross above volume, that's a bullish signal. And the bullish signal happened down here in negative values, meaning that this move should run even more. And we see the push up. Now, look here. Momentum started to wane as it was on my level, because I'm not focused on the indicator first. I'm looking at my structure and my chart. So see how that's lining up with my structure, with price action, with the trend pulling back, and the indicator also telling me that momentum is shifting to the downside. MACD is going to let you, it's going to get you ahead of the game. It's going to help you to be able to be ahead of the game. And then it made this bearish crossover here. Now, here, see how the histogram didn't build? It really just kind of stayed stagnant, meaning that I shouldn't expect this move to be very much, right? Versus how here it built, and see the move was, it was more of a trendy move, I guess, instead of like sideways. And then this was decreased, built, whatever. And that was a move. So you want to see it like do that. Now, if you ever see the two lines or converged, meaning that they're together, diverge apart, make sure you watch the Divergent series. It's amazing. This is when we expect it to be non-trending. The price and the volume are the same. We shouldn't really expect too much. Now look when MACD, look at it, made this bearish crossover right here. And not us look up there at the top of VWAP and you about to break below the upper band. But I was able to see it quicker and anticipated on MACD first. When I say VWAP and MACD are best paired together, you can't tell me nothing. When I got these two pulled up on my chart with my levels, of course, I just want to drive that in. We don't have naked charts in this family. We don't do naked charts in this family. We do not do naked charts in this family. It's beautiful. It's beautiful. Let's look at another example of a more volatile stock, shall we say. And we'll come over here to this stuff. We'll come over here to Telfeasy. I mean, honestly, all in here. Just look at this. This was beautiful. I think this all I got on this chart too is just these two lines. Yeah. Oh well. So looking here, it stayed below this upper band all day. Now, we also know that this morning, it was a little bit of a chop morning, right? But if you would have been in this trade, you could have stayed in. This would have helped you as long as it didn't break above here, right? You would have been in it from this 169 down here to 166. So now that would have took some guts. You need to have been in tune with price action to be able to do it, but it would have been cool. It would have been cool. Now see how these are converged in here? I would have left it alone, but when I saw this start to diverge and the histogram was building, this is right in here. Then we get this move over here, right? Then you get this move. Right, so that's VWAP and MACD. Before we pull up RSI, how's everybody feel with MACD? We 3 for 3? Are we 3 for 3 in here? All right. Period. I'm about to mute myself for 2 seconds, y'all. Let me call one of my mentees. All right. Okay, so we got that. So now let's look at RSI. I thought you was calling me. I guess I did just dry say one of the, I'll call you later, boo. I'll call you later. I got you. All right, so let's look at RSI, which is the relative strength index. Let's take it literally. This is showing us this is showing us the strength of speed. All right. So if you compare the two together, like MACD and RSI, because typically people tend to be like a one or the other type of person. In my opinion, I want to look at something. What was something that actually attempted to trend today? We'll just stick with Tesla. I think, did Apple? I didn't even look at AMD did. Okay, thanks, boo.
Amazon did too.
Amazon did too. Where the frick was I at with Amazon? Oh, that's Miss Deborah voice. I know that voice. Okay, cool. Let's look at it. All right. I was trying to think of something that I had that one marked up like a wall in the 80s. So let's just come right here to this bearish crossover in positive values because we love that. Let me try to make the screen bigger. Yeah, I'm recording. I'll post it. It'll be on YouTube first. It'll be in the Discord tonight. It'll be on YouTube and in the Discord tonight. All right, so let's look at this bearish crossover right here. And we want to look up here at the top. So on the candle as well. So look at this candle, right? This look like it's totally ranging. You like, okay, what is this? I don't want that. So a couple things I want to point out to y'all. That one thing that I love about RSI, and I always have, is you can see chart patterns so clear. So clear. I promise you can. Let me make this smaller. Or we'll do like a 2 point and I'm gonna do it white. Y'all see a chart pattern right there? Let me move y'all, like where I drew the white right here. Anybody see a chart pattern? Period. It exactly is. Exactly is. That is an H pattern. It is an H pattern. Now it ended up double topping, but same thing. It double topped in the midst of it, but then it dropped and it made this H pattern. So see how this actually came in on RSI sooner, right? And then when it kind of like, quote unquote, double top subjectively, you know, however you want to call it. Now let me move the white lines off. So good job, Josh. I told you can see these. Because overall, yes, you can get this in there, and then you got that crossover, and you just never would have known from looking at this one little candle. Now, we also want to pair with the fact that we understand accumulation and distribution, right? So if I would have saw this, I would have been like, oh, snap, this is, okay, this is distributing. Now, would I have expected this to run for a very long time? No. Why not? I'm on the 5-minute chart. I'm on the 5-minute chart. When I'm on the 5-minute chart, when I'm doing a day trade, I'll go ahead and tell y'all now, especially because I cannot remember for the life of me which one of my babies I told a 3 candlestick max rule. Because I've just been walking around saying it to all of y'all, hoping that one of y'all be like, oh yeah, I forgot you told me that. Yeah. So I typically have a 3 candle max. Typically. Now, price action, volume that day, if we running that day, if it's, you know, whatever, cool. But about 15 minutes is more than enough for me to be sitting up here and looking at this candle go from red to green and green to red and back again. That's enough for me. I'm gonna make my money in there, and that's a nice, safe number to have. Now, this is, of course, as if we are in a trending market, right? So yes, that would have been able to help you out there. And then we see that it did indeed push down. And then, so again, look how here, well, we'll look at MACD when we see it start to kind of curve up here and we see the momentum, the histogram change. We also see the bullish engulfing up there at the top where the candle exactly on. But what I want to point out is that RSI is showing it to you quicker. It actually showed it to me right here that it was about to change. So yes. So no, I got you. Sorry, I did kind of do that backwards. So if we're looking at RSI, and you, again, don't forget, we can just click on the settings for it. So what it is showing us, the purple, yeah, is the actual RSI line. This is the actual strength index that we're seeing change. And then the yellow is a moving average. I believe it's the 14. Yeah, it's the 14 moving average. So how this works is it's oscillating, and it's going to oscillate between 0 and 100. Now, the numbers that we want to pay attention to, and whenever I do use this, I like to change this up, is I'll change this upper band to red, always, always, right? And then this lower band, which is going to be around 30, at 30, the upper band here at 70. These are the numbers we want to pay attention to. So if the price is, or if RSI is above 70, it is overbought. It's overbought, meaning it's a lot of buying bins going on. It's literal. It's a literal, think of it literal. This stock is too overbought. There's been a little bit too much buying, needs to pull back a little bit. So if it is overbought, that is a great signal to get into puts, to start looking at puts, right? And the reverse of it is if it is below 30, then this is oversold, meaning they've been selling off on it too much. We should be looking for this to start to reverse and come back to the upside. Now, in the middle of all of that, we have the 50, this middle band. Now, when the price is in here at around this 50, it's not trending. All right. Where do you look at on my chart to see what time frame I'm on? We got 3 places we can look at to see the time frame. So I'm not liking Amazon the most for this. We're going to go back to not SPY, Tesla. All right. It wasn't it had some moves, but it wasn't like the clearest to look at. So for example, if we're looking at RSI right here, we down here below, right? It's below. I'm going to love to see this move above. This is a move up. Now notice how when the price just stayed here in the 50 range, and the no trend zone is what I call it, what was the price doing? Just consolidating. But when I would have saw this, ooh, I love that. I love that. When I would have saw the RSI cross above the moving average, right? So speed cross above the price, I would have loved that. And look how it took off. Look how it did what it had to do. We love to see that. Now, this is great. Both of these are great to use on, and we'll go to UAL. Both of these are great to use on high time frames. I love them both for high time frames, particularly MACD. Particularly MACD. That is what I am looking at for my swing trades, because I like to enter into swing trades like the second that MACD is making any sort of bullish bearish crossover. Baby, let me get that. That's for me. That's for me. So when I look at this, because I know someone was asking me earlier about UAL, there's multiple things that can happen. This is very clearly a bear flag that's up here at the supply zone. I exited right here. Like this is exactly what we marked off. Like couldn't have been a better swing trade, a better planned out, timed moving swing trade, all of that, right? Now, when I look at where the price pulled back right here, it kept the 20. This was nothing to make me get out, and kept the 20. And then we see what happened the next day. Well, so what's constituted as a high time frame? Would the 1 hour be considered? Would you consider the 1 hour a high time frame? So we're going to pull moving averages back up because we're going to look at all of this. Now, do I ever have all this stuff on my chart? I wish I would. Never do I ever. Never. Now, do I see that as a bullish, a bearish, what is this? What the frick is this? A bear flag? Yes, I do. I absolutely do. We up here at this resistance. We doing all of that. But when I come on an even higher time frame, look at MACD. Look at RSI. Now, did I exit? Yes, because it hit exact. Why wouldn't I? It hit my exact target. I absolutely did. However, I also see my 200 is up here at 50 with momentum shifting and the speed also shifting. My eye is on here for a break above, what is this, 46. I want to see it break and hold above 46 and I'll swing it back up to 50 again. But if it rejects it, I'm going to swing it right back on down here to 43, right? Right back down to the trend line because that's what we marked off. So I know someone asked me that earlier, but that was kind of like I think my response was, let me see your chart. But overall, I'm y'all like, especially I love that y'all trust in me. Y'all like my trades and all of that, but I don't do nothing extra than what I say outside of the OG chat. If you know, you know, and nothing extra outside of what I post in the Discord. The levels that I marked off. Why would I have stayed in UAL, a swing that we've been in since more than that, since Friday. We've been in this over a week. Why would I have stayed in it any longer when I saw it hit my exact target? That's greed. Not greed for more profit. That's greed, and it's, what word do I want to use? Insecure, and just kind of let that one sit on it, right? If I mark this off, I'm gonna trade that and I'm gonna take my profit right there. I don't care what it's gonna do next until tomorrow when I enter into it again, or when I'm looking to enter into it again. And I hope that makes sense, because I know I had a couple conversations with a few of y'all today. Did I just unplug the Wi-Fi? Oh, okay, thank God. Okay, so we've done this. All right, now the last indicator. Why did I just take MACD off? The last indicator that I want to show y'all is, it is called Smart Money Concepts. Here we go, Kevin. Here we go. Here we go. Here we go. I know we looked at it before, but we're just going to look at it like more in depth. All right, so with this, it is the Smart Money Concepts by Lux Algo, the free version. Make sure you get the free version, okay? There's a video in the Discord. All you have to do is go to the search bar in the Discord, type in Smart Money Concepts, the video will pop up for this one. Now, if you've ever taken my webinar, you'll love this indicator. Because this look for dang show how we chart. If you are trying to tighten up your charting, or if you're trying to learn how to chart, this indicator is it. And I don't really trust like too many like totally, but this one, yeah, I love it. So let's look at it, and I'm gonna go to a layout where I don't have anything. Oh yeah, we got to do the Keltner channels too. Is Smizzy on here? Yeah, okay, cool. Where is it at? I don't think that's what I was. Yeah, we'll do retracement too. Yeah. What is that gonna pull up though? I just blanked. Oh, thank you. Thank you. All right, so smart money concepts. What this is it is going to mark your charts off based off of like supply and demand. Thank you. So let's go over what some of these words mean, or what some of these labels mean. So here, and let me make it bigger. Again, there's a video in the Discord full of many, a really good video explanation. There's a way to make the words bigger. Yeah. We definitely want that turned on. I think that's all of them that need to be bigger. All right. Can y'all see that better? I can't like make the screen too wide because then I get a little thrown off. I can't see, sorry. Don't forget there's going to be a video though. You'll be able to squeeze or zoom in. But all right, so the CA, this right here, this stands for change of character. So this is showing you change of character is marking off the swing high and swing lows, right? So for example, right here, we see that the price made a high, and we see that this was previous support. So when this price pulled back right here, there's two things that we would have been, there's one or two things we would have been looking for it to either lose previous support or bounce here at previous support, right? So if the price pulls back and it falls below previous support, then this is a swing high and the character of the trend has changed. So this is your change of character level right here. The break of structure is just about the same. I'll just kind of leave it. It's the same thing. It's keeping up with the trend, the lows and the highs. We'll say that the break of structure is the highs and lows, while the change of character is the swing high, swing lows. Y'all want me to repeat that? The break of structure on here is keeping up with the highs and lows, while the change of character is keeping up with the swing high, swing lows. Please do not forget, there is a difference between your swing high, swing lows, and just lows and highs. All right, and then the EQH is going to mark off the equal highs and equal lows for you. Look at that, because a lot of people tend to kind of like maybe not catch that. We love that. Now the equilibrium, this is in here like a retracement, like the retracement area. We'll say that, which is going to be the gray box. And then the blue boxes are demand zones, or we'll say they're support zones. This is where we expect to find support. And then, whereas here, this lighter red one, this is a supply zone or a resistance. But when I see this, the darker red one, this is the supply zone that it's marked off. And then down here, where you see the darker blue one, is going to be where the discount zone, which is the demand zone. So the premium is the supply zone. The discount zone is the demand zone. The equilibrium is the retracement level. Your change of characters is keeping up with the swing highs and lows, and the break of structure is keeping up with the lows and highs. And so when I say that this is beautiful, if you do not feel comfortable with your charting, or if you just need to pull something up, look at it real quick. So now if I come back over here to my layout that is charted, you can't tell me nothing. I already know. I know that's a little cocky, but you still couldn't. You can't tell me nothing. I already know. Let's look at it with all of my charts are like so marked up right now with the, we'll look at it with SPY. We'll go to the 1 hour time frame where we marked more of those micro levels. And there's a lot going on. We'll make it bigger in here. Minimize MACD time in here. So we can see it in here. It's saying like that this is resistance, which I marked off in here at these equal highs as well. So this is the like resistance area. Up here is the supply zone. So if you see weak high, which can't remember who it was, someone was asking me if the weak high, if this is made, if this is put like in real time, like as it's rejecting off of here, and yes, it does. Yes, it does. Now, at one point, if this candle would have been like a stronger bullish candle and the price was all the way up here, this would not have said weak high. But the second it started rejecting, it's going to turn it into a weak high. So if it's a weak high, it's showing us that the price is going to reject back down. If it would have said a strong high, it's telling us that momentum is coming and the price is going to push up with it. So I like that. Now, there will be times like, look here, this is saying that this is the change of character. And I get that. I get it. I do. Look at that. I get it. However, mine's not there because I'm not going to be trading it all the way down here where I see it's selling off at, right? Like this is where, look at this, or like if they were buying into it this way, they're going to sell off on it this way, right? Like if it was coming above this level, they were buying. If it's coming below this level, they're going to be selling off on it. So I don't want to, I'd stop myself right in here. I'd want to enter above the wick or below the wick, right? So that's why mine doesn't always like perfectly match up with it, but I rocks with it. I rocks with it for real, even like on all time frames. Love it, love it, love it, love it. Now the equilibrium is where, think of the word literally, anything could happen in here. It could reverse or it could be a continuation in here, right? And you can kind of see here like this change of character. And so see how when the price came back below right here, this would have been a nice little scalpity scalp right into a demand zone. So I definitely wouldn't have been trying to hold on to it like that much, right? But it's still there. No, that's the most. Didn't I just add this? All right, so retracement levels. Okay. All right, so the Fibonacci levels. Fibonacci levels are, it comes from the Fib sequence. And so I would definitely suggest that you kind of look into that, like the Fibonacci sequence. I also recorded a video previously already in the resources channel, in the indicators tab. I recorded this video explaining Fibonacci levels and like how the Fibonacci sequence works. So definitely come on back in this channel to watch that because I'll have explained it much more in depth, just what the Fib sequence levels are. But it's a number, it's sequence, it's a math calculation, things that we find in nature. And there is a golden ratio number, which is 618.618. Or 1.618 is the actual number, right? So you can use the automatic ones, which I typically do use. You can do the automatic Fibonacci extension or the retracement. I typically have those both up, or you can draw them out for yourself, either using the retracement or the trend-based fib extension. I don't think there's anything wrong at all with the extension one, so I'm fine with it. Now, I also, maybe I'll use these in a heartbeat to make up my watch list, especially if I'm kind of quickly doing my watch list to look for levels. Now, the biggest thing that you need to know when it does come to the fib, again, is this 0.618, okay? Now, the entire retracement is going to be from the 618 to the 0.5 to the 0.382. This is the entire retracement zone, because we know we have zones, not just price points, right? So in there, I'll draw it later. There's too many colors going on. But so this whole here, so from this 103.72 down here to the 195, right? The price could retrace at any point in here, but it's particularly the 0.618 that you want to keep up with. If this would have came above the 618, we could have believed in the longevity of this move up, but because it rejected that yesterday and then today's confirmation candle ended up making a bearish harami, we can see that this is rejecting the golden ratio, right? And they also, okay, tomorrow, right? Yeah, after hours, interesting. So it kind of makes sense that they would push this price down some, and we'll see what's up with earnings tomorrow. Now, let's look at it on something more, a little bit more, because not my levels just matching up, but let's delete all these. Okay. Again, you could just take this here on the daily, and this is one above, this 417.18, mark off a level, your levels below. And I would do the same thing we did with the moving averages. Now I'm going to go down to the 1 hour. Now on this, because I do see like where it marked it off as the retracement, so I'm going to have to turn around and pull up the other one and do for here, right? Because it's saying like this last move was a push down, which it was. And then I would say here, now when I come down to the 1 hour, the level that I am particularly looking for is the golden ratio. So a lot of times when y'all see me and I'm like, this is the golden ratio on the hourly, so I'm definitely gonna mark this off, because you know the hourly is like the assistant manager, right? It can get me through the day. So I want to know where would this possibly retrace to, and then I'll definitely mark off the 0.5 as well. And then, I mean, you can just do and trade it like that. Now, I do not suggest, especially if you're doing this like for your watch list, trying to like mark off levels that's anything lower than the hourly, right? You kind of, that's a little bit too much. But these are nice levels right here. The 408.89, you come below there, 408.75, below there, 407.58. And there you go. Now, if I was to pull up my moving averages, look how this is in tune with it. This is the 200s. Oh, snap. Right in there with that golden ratio. The value zone on the hourly, right in there at that golden ratio. We love to see it. And that's what I got. So how y'all feeling? How y'all feeling? How y'all liking this? How was this class? Any questions? Anything y'all want me to go back over? Y'all know I love me a good question now, and all questions are good questions. Asking questions is like sticking.
I got a question. When the candle, it breaks one of the levels, whether it's support or resistance, do you wait till the candle close, or you go in just as soon as it breaks?
So it depends. Like I'll kind of look for Thank you. So I'll kind of look around at everything else, but my general rule of thumb is I enter in the last 45 seconds or the first 45 seconds of a candle. I'm definitely not going to enter into nothing in the middle of it. Not really. Now it might break my level with full on volume, like, cause maybe something on the economic calendar data just dropped, right? And then we know that the market is going to move and it broke my level. In that situation, I'm gonna probably go ahead and get in. Now we definitely gonna be talking about it in the webinar too, because my favorite strategy has my highest success rate is the break and retest strategy. So we'll go over that. Can you go over what a little different or Big Dipper is? It's the 50 is it's retracement, right? Like I said, don't think too hard about it's just a nickname. It's the retracement. So the 50 is the smallest retracement level and the 100 is the largest retracement level. But it kind of helps to give things a nickname because then you can remember it. So the 50 is the little dip, the 100 is the big dip, the 200 is the value zone. We want to know those. I use the 20, 50, 100, and 200, just in general, always, because, you know, that's up on my thing. And depending on what strategy I'm using, I also use the 5, 8, and 13, which is great to use on the 1 hour, on the 1 hour and below. Oh, that's what I get for drinking water. Pass me the Starbucks. Thank you. Refreshing. What did I say? Oh, thank you. Yes. So now when it comes to the moving averages, why I say like the 1 hour and below, listen, the 200, I'm going to be able to pull up my 5-minute chart and the 200 moving average is going to sit right there. The price is going to come above and below my 200 as well, right? I don't even know which one this is. What is this? The 100, this orange one. This is why I always change my colors. Remember, again, just click on the wheel and then you can do it quickly. I gotta know what I'm looking at. All right, that's better. Okay, so. Clearly, I can see right here, right now for this, because I do see the 100 right here on my 15-minute time frame. Baby, I would not be looking to get into SPY until it broke below 410.36 or like 410.25, somewhere in there, and I traded down here to this 408.90. That's my first target, right? That would be absolutely my first target, because y'all know that that's one of my triggers that I look for, stock market triggers, I'll say. Entry triggers, let's be specific. Ooh, look at MACD. Shannon, yes. Shanahan, I'm sorry, yes. So yes, they'll hit, and we see like right in here, this cross below the 200, all of that. I'm not saying that they won't work on there. What I am saying is that I care more about these higher time frames on a higher chart. I care more about it there, right? Because if I'm on a higher chart, it's because I'm mapping out a bigger move. So do I really care what the price has done in the past 5 days? Do I really care about that moving average when I'm trying to like map out what I'm doing overall? No, I don't, not at all, not even a little bit. But again, not saying it's not going to hit, because look, the 20 is up here and it rejected to 20. Not saying that I'm not going to get a signal from there. However, just because I saw this close below the 20, I'm not expecting it to come all the way down here to the 200. I'm not expecting that. It only just closed. Like I'm not expecting that at all, because look, the 20 came above my 100. It came above the 50, and we're steady like trading above it and bouncing off of the 50, not even coming down to the little dip. So overall, I would look at this and say, okay, I mean, maybe like I'll get like enough of a move down, but this would be the lowest I would expect it to go. That would be the lowest I would expect it to go, not what I'm saying the lowest that it would go. My expectations, I like to have realistic expectations so that I can get realistic profit and not just being like, well, I think it's going to do this maybe, so I'll get in this trade. That's stupid. No. So I'm going to expect it to come down here because this was the low on Friday when we had this huge push up, right? So gaps, which this was a gap. A gap is from the close of one day to the open of the next, which is all in here. Gaps end up becoming, or we then need to turn around and look at it as an important zone, whether it be a demand zone, whether it be a supply zone, whichever one it is, right? And honestly, right, we'll just go ahead and just put it there. But I would look for this 408 down to about like this 407 in here for this to come down and then bounce back up. Because look at all of the buying that happened in here. In order for this to have closed on last Thursday at 405.13 and then on Friday for it to open at 408.91, a lot of buying happened right here. So maybe I would expect this to come down and bounce up like around at this 408.90, but overall I see that the trend is pushing up. And look at MACD. And the selling volume of the past 2 days was much lower. So maybe it might push down. Sure, that's fine, but I'm expecting it to bounce. Oops, did I lock that? Okay. All right, well, I really enjoyed this. I love doing classes with y'all. Definitely have a lot more time on my schedule so that where I'll be able to do this. We're definitely gonna have a class I think it's gonna end up being every Thursday. I have somebody on Tuesday nights in this time actually. So I'll probably do it like on Thursdays, and don't forget that on Saturday, Cam, we put that in the events channel too. Cam is gonna go over the trending pullback strategy that he's talked about in the Discord.